Dylan Bradfield is portfolio manager at Sharenet Wealth. He's also the man who told us all to buy Blue Label when it was cheap on the listing or proposed listing of Cell C. Well, Cell C is listed. It's now delivered its first set of results. I'm very interested to hear what Dylan thinks of those. Also, yesterday we had Telkom bringing out a trading update that the market really loved. The old monopoly seems to be, at least it's got one really good asset in Openserve, and the share price of that stock jumping on the numbers. And then just to close off, a trifecta of very interesting bits of information for Dylan to share with us. Today, we had Blue Label's operation in the electricity sales area, striking a fascinating deal to sell IPP, in other words, independent power producer electricity, to municipalities, almost 100 of them. Very big breakthrough for the country as a whole. That's a lot to get through in the time that we have allotted, Dylan. Let's just start off with a last first. Explain, how big a deal is it that we now have Blue Label's operation being able to sell electricity, non-Eskom electricity, to municipalities?
Yeah, it's the unicorn. It's the unknown right now. I mean, I think post earnings results at the end of the month, we'll have a bit more gateway to ask the questions. But from early interactions we've had, this is something that's been 3 to 4 years in the making. That converted a couple of municipalities across. And I think one of the easier ways to think about it is you've got a big brother that's going into the municipalities where Eskom has failed horribly. That's there to revive the services, to make sure that all the prepaid electricity is accounted for correctly. The gateways are paid for. They've hired, through government subsidy, circa 10,000 employees that will effectively roll out into the country for illegal disconnections or connections, to disconnect all of those, put the new prepaid meters within that they service, and that's pretty much their whole gateway. And then you've got, as you said, the IPP that's going to be coming through, where you can sell and distribute electricity to areas that need it. I think it's a fantastic thing for Blue, but I think it's a fantastic thing for South African economy on a whole.
It sounds like it. It sounds like we've been stuck with this Eskom monopoly for a long, long time. And the IPPs, the independents, haven't been able to really break through. But this would give them a route to market.
Yes, absolutely. It's an exciting, we don't know the exact timeline and how this will start to focus and to roll out. But I think, as I said, they've already interacted with a couple of municipalities. I think it's a couple of months versus a couple of years from where we are now. And
it has got the impact, as you said, of being a unicorn for the bottom line of Blue Label.
Yeah, I think, some early numbers in our suggested comments were, it could be a 300-400 million per month sort of revenue cycle for Blue with extremely high margins. And that's just the starting point. It's really unknown how big this can be. It's been part of the Blue strategy for 4, 5, 6 years now. And the fact that they've gotten this nurse license, I think it's just fantastic. It's just one of the multiple growth strategies that's starting to come through.
You did tell us in September last year, when we spoke about Blue Label and the listing, or then it was still the forthcoming listing of Cell C, you did say you couldn't wait for the Blue Label guys to get back to their knitting and not get rid of Cell C, but not have to do so much work there. Is this one of the things that was that you were thinking, that you had eyed back then?
Yes, that's correct, Alex. So if you remember correctly, there's 2 strategies that we mentioned that we were looking forward to. One was their treasury functionality. This was part of the business circa 2017. In essence, it was Blue Label going to their core, where they would go to the majors and buy data at discounts on billions, and they would take that through the distribution cycle and convert the cash very quickly off sales and just repeat the process. That was essentially a 40-45% earnings uplift for the company before they got involved with Cell C. And by way of having to bail out Cell C or help with data purchases, that cash flow has subsequently never been recycled back through the treasury. Now with the separation on the IPO listing, Blue gets their balance sheet back. They get back to basics. That is an easy win on the earnings side. That's an easy earnings trajectory. And the Blue strategy, or the Blue energy strategy, is just the unicorn that's to sort of tip off the iceberg, with other multiple growth mechanisms to come. Those two are at front of mind right now.
Those first set of results from Cell C, what did you make of them?
So always going to be a complicated set. Divorces are always ugly, as the people would normally say. What it's important to sort of mention to the retail public is, when you look at these type of IPOs, you always front load many of the costs. You've got a lot of one-offs, intercompany transactions that net off from each other. You had a ballooned amount on the EBITDA, which would have confused many investors. But to put it simply, Blue converted a lot of their their loans and the data that they'd acquired from Cell C. That was circa 13 billion rand. The IPO came out at 9. The difference thereof became a consequence or other income line through to Cell C. So you would have seen a ballooned amount on the EBITDA, but if you adjust it back, strip out the IPO costs, normalize CEC, which will come through on the second half, they're on track. They're in line with what we expected, and we're quite comfortable with them delivering and executing as George Mendes had predicted, and with some very bullish comments, I'd say, regarding the second half coming through on the prepaid side. And if you remember, they'd signed some significant contracts with ShopRite and Petpool. We'll see those come through. Prepaid should go back to double-digit growth. And more importantly, the wholesale industry business they've built up, which is the MVNOs, is still growing over 20%. And there's no other segment that is growing as aggressively as that within the telco sector. So, yeah, they've definitely got a winning horse in that strategy.
Very innovative. Their partnership with Capitec showing what could be done, and now rolling it out with ShopRite and Pep as well. They do seem to be on the right track there. But getting back to yesterday's numbers from Telkom, Telkom has always kind of had a bit of a bad feeling amongst many South Africans because of its past. It was slow and stolid, and couldn't seem to get it right. But my goodness, through Openserve, they really seem to be pumping now. That's a wonderful asset for the company, and now even more than half of their revenue.
Yeah, I mean, we were on par with what they delivered. Year-on-year growth just under 3%. I mean, it's very difficult to knock out anything in the high single digits right now in the South African market, but also trending nicely on the EBITDA. With the margins around 29%. I think if you look across Cell C, they're around 23. They'll normalize towards 25. And just to make a quick comparison, we've got a nice story going through with Telkom with their EBITDA around 3.2 billion. CapEx has increased a little bit. If we take a comparison against Cell C, they're trending towards just under 3 billion EBITDA. So very comparative in terms of the EBITDA, but you've got a Telkom on a 30 billion market cap, and you've got Cell C on a 10 billion. So, there's an opportunity there in itself where you start to look for, capital allocation. And Cell C's listing came with a big, strong warning. They are focused on capital allocation. They're looking at dividends very aggressively. I think within the next year, they'll probably be one of the highest dividend-paying telco companies. But yeah, going back to Telkom, fantastic set of results, growing quite nicely. Data is just under 10%. Mobile sales as well, just trending above 10%. Quarter on quarter could have been a bit stronger, but I think, there's optionality within the company. There's MTN always lurking to purchase or get involved with Openserve. I think with MTN's distraction back towards IHS now, looking to buy the remaining equity there. I think some of the pundits think that perhaps what we would see with Telkom and MTN is not a tie-up per se, but it might be some kind of strategic assets purchase that could come in the form of a 30%, 40% stake within Openserve. We've seen that with Dark Fiber Africa, now with Remgro and Vodacom. So consolidation of infrastructure is definitely a trend. I think consolidation within companies, I think there's too many hurdles to get through from a ICASA perspective. So it's something I would look out for. We've seen Vodacom go to Kenya. So the big incumbents are looking for growth elsewhere. And perhaps this is what, Cell C's time to shine. They've pretty much got the rule of the roost in regards to MVNO growth. I don't think the big guys can compete on that scale. We've got insurance companies now getting involved in the MVNO. So it's really an interesting sector. It's garnering a lot of interest.
It's coming through very clearly that Cell C is your preferred value play here. But when I think about Naspers and Tencent, where you buying Naspers at a discount to its Tencent holding, is it something similar with Telkom and Openserve? It's got this incredible fiber broadband asset. Is it worth more, that asset, Openserve, than the whole of Telkom?
Wouldn't say it's worth more, but I think it's worth over 50% of their current market cap. Yes, it's probably being discounted quite aggressively. It's quite a high capex cycle within that business itself. I think on certain valuations, you would put it anywhere over 20 billion. I think dark fiber sale went through at about 11 times EBITDA. If we put that on a comparison for Openserve, that would probably put Openserve over 40 billion. Now, we've just mentioned Telkom's worth 30. So optionality within Telkom is significantly there. We just don't think a clear outright transaction would come through. I think a stake within Openserve with a competitor like MTN is probably a more reasonable, rational explanation where competition would actually allow that to happen. And within Telkom, there's a lot of historic infrastructure that needs to be maintained. So there are higher legacy costs within the business as well. So not as clear cut, but definitely an optionality which gives Telkom more upside in share prices for sure.
Dylan, what's going on with landlines? It sounds like a ridiculous question, but if you go back 10, 20 years, perhaps, that's all there was landlines. Now we have very few. I don't recall using a landline in a long time. I'm sure they do still exist. What is the state of play there?
I think it's a decommissioning act that's slow to get there. I think this will take a long time to sort of be decommissioned. Telkom will still hold on to those assets and, try and find some way to, monetize it in some way, shape and form. But, front of mind right now, their whole strategy has been an advancement through on the data side of things. So I think it's back of mind right now.
And if we pull it all together, we've spoken about Blue, we've spoken about Cell C and Telkom. Where would you be finding the most value out of those three stocks today, given that you know them really well?
So I like Telkom for its optionality with the Openserve deal. There's no timeline in which that could happen. They are growing their data sales. They're taking subscribers from MTN and Vodacom, so they are winning market share in that department. Their ARPUs are a bit light compared to Cell C, for instance. They're about 187 per month. Cell C's trending around 230. With Cell C, what you have is a 6 times price earning company with very little attention right now. The market is pretty much show me and then we'll pitch up. You've got a company that was technically insolvent over 12 months ago. Shareholders are very, quick to remember the history, the legacy that comes with it. So, the optionality, I would say longer term, perhaps Cell C, shorter term, Telkom. But within Blue Label, you've got a very unique, cheap asset that's being discounted. And I think you've got a market that's also discounting some significant fintech growth that's still to come. If I just give you some reference where, Blue Label were putting billions each year through Cell C. Now they've got their balance sheet back. That money that they don't have to put back into Cell C can go into the projects that they've really wanted to get going with. And, when a fintech business starts to grow, it's 20, 30, 40% per year. So I think they're excited to get back to the basics, as I've always said. Blue Energy is one of the strategies. The treasury functionality will bring immediate growth into the company. So it is my main pick. It is our choice selection longer term. We've got a big position within Blue Label. We've supported the company. They've had a rocky little couple of months in regards to the IPO. The market was surmising a higher valuation, and the market said, show me first, and didn't take too kindly to the upper levels. But that's fine. We've got, these are what makes markets. You've got a willing buyer, willing seller, and, the optionality is still around. Very capex like business. Their debt's come down from 5.8 billion to 2.4 billion. They're under 0.6 on net debt. They're one of the lowest in the market. And as I said, I think they're going to, Cell C and Blue Label will probably be delivering probably the highest dividend yields within the next 12 to 16 months. So I think there's a lot of excitement to come.
So if there were one of the three that we were to put in the BizNews portfolios, it sounds to me like your recommendation would be Blue Label.
Still correct. Yep. We'll just let the earnings results come out. We anticipate the stickiness or the kitchen sinking of the whole split. And I think once the shareholders get to see the separation of the two companies, it'll digest that. I think there'll be some understanding as to the next 6 to 12 months where the company is going and where the price is now. I think that's the bigger risk reward.
Some savvy insights from Dylan Bradfield, and he's been calling it absolutely 100% on the money. So pay attention. Dylan is the portfolio manager at Sharenet Wealth. I'm Alec Hogg from biznews.com.